We have Lunch Money. Lunch Money today is sponsored by FTX. FTX has a number of different things that you should go check out. First, they have obviously great pricing when it comes to buying Bitcoin or cryptocurrencies. They're about 85% cheaper than most of their competitors. They got great liquidity. They know what they're doing. They've built all sorts of different infrastructure. That helps you make sure that when you buy things, it is cheaper to actually execute. They also have a beta going on with digital stocks, meaning they're going to allow you to buy stocks and crypto in the same place. But the key to their stock offering is that there will be no transaction fee, and also they will not conduct any sort of payment for order flow, which means that you get better pricing as well. Go to FTX US, go and click on the link in the description, or I will drop the link here in the chat. Go sign up. When you sign up, if you trade, I think it's $500. Yes, $500. Then you'll get $50 for free, 10%. So trade $500, they'll give you $50. That's what happens when you watch this show. Lunch Money time. What's going on, Plina? How are you?
Before we start, I'm great.
Yes.
Before we start, like the people in the chat who are here every single day, I see you, same people. Who are you guys? Like, what do you do? Are you
let's
watching?
get to the topics.
Are you watching from work? Are you watching?
What happens when you
home?
die?
Wait, what are you talking about?
Or if you're standing on Earth, is it up or down?
Don't talk to me. So, so I'm just curious. Like, can you watch this at work? You know,
Yes.
It's so interesting. Oh, they have jobs, they said, and one of them's a farmer. Okay, Speaking of jobs, God, what a transition. Weekly jobless claims hit 229,000, which is the highest level since January.
Weekly jobless claims are going to continue to increase because people are going to get laid off because the people
Because
who
they're
own the
watching the
businesses.
show at work.
No, the people who own the businesses are worried about the macroeconomic situation. Look, the economy is this complex machine. And if asset prices are exploding, inflation is high, the Fed steps in and says, maybe we should go ahead and we should create a business cycle to clean out some of the riffraff. And when they do that, they raise interest rates. When they raise interest rates, asset prices fall. When asset prices fall, it also means that many people say, I don't have as much money as I thought I had. Maybe I'm not going to go spend as much. If I don't spend as much, that means the businesses aren't going to make as much. It's like the coffee shop here in Miami. Talk to them every single week and ask, hey, how's it going? They're down 12, 13% over the last 2 weeks. Means people are spending less money. They're going out less. And so when you all of a sudden have people spending less money, that means the businesses make less. If the business makes less money, they all of a sudden start saying, do we need all these people if our revenue is less? What happens if all of a sudden we're not making as much money as we were previously? And so you get this chain reaction through the economy. And so you see in crypto even hiring freezes, layoff. You see it in other industries as well. You're going to see the weekly jobless claims number continue to tick up as long as we are moving closer and closer to a recession, because the people who own the businesses are saying, we need to make sure that we survive. How do we make sure we survive? We cut costs. We get much more intentional about our strong balance sheet. And so cutting costs, usually one of the biggest costs is people. Therefore, let's go ahead and get rid of the salaries and drive our costs down so that we can remain profitable and that we can continue to make it through a recessionary period.
But then efficiency goes down.
Maybe.
Anyway, you have a very international audience.
Yes, more than 50% of the audience is not in the United States.
People are watching from Europe, so it makes sense. It's after work, Taiwan.
Drop in the chat right now where you guys are tuning in from.
I just said that.
I know, but I said it verbally. You didn't say it. You typed it.
What?
Yeah, that's your head's in a blender right now. Yeah,
Your head
you
is
were
about to
typing.
be
I
in
was
a blender,
saying. When
in
you
a
say I
toilet,
said it, no. When you say
in
I
a
said
locker.
it means that you verbally said it.
I did say it earlier. I said, where are you guys watching from? Work,
Oh, that's
home?
true. You're right. You guys see that right
Literally.
there? That's called
This is
a
my life.
fight mitigation tool.
Right before the show started,
You're
I
right.
said there was a lot of
You're right.
miscommunication.
You're right.
Not on my end.
You're right. You're
You're
right.
just saying that. Okay, we're gonna have a.
Y'all ever seen a wife get mad at someone even when they say you're right?
Never say you're right when you don't mean it. I know when you don't mean it.
Every guy right now
I know
just
it's
said,
not
I heard
genuine."
that before. I heard that before.
Yeah, Edward said, be nice to your wife.
My wife be nice to me. All right, come on.
All right, so there's this thing called shrinkflation, in which the packaging of the goods that you purchase is shrinking, but costing the same. So, from toilet paper to yogurt to coffee to corn chips, manufacturers are quietly shrinking the package sizes without lowering prices. So in the US, a small box of Kleenex tissues used to have 65 tissues a few months ago. Now there's 60. Chobani Flip's yogurts have shrunk from 5.3 ounces to 4.5. In the UK, Nestle slimmed down its Nescafe Coffee tins from 100 grams to 90 grams. That's wild. Dish soap in India is shrinking. Like, do they think we won't notice? Or do they just have to do it because costs are rising and they're passing it on to us, the customers?
I'm just laughing because somebody said you could be right or you could be happy in the chat. The shrinkflation problem is something where they don't think that, one, you're going to see it at first. And then two, is they do realize over time you'll recognize it, but there's nothing you can do about it. So is it better to give you less product for the same price, or is it better to give you the same amount of product and raise prices? Well, you as the consumer are less likely to notice the shrinkflation versus the inflation of prices. And so if they are able to do it, which again, you're talking about supply chains, you're talking about a lot of complexity, this shrinkflation actually can take a little bit longer, because it's one thing just, hey, change our prices, right? You can pretty much just give that decree and they go and they do it. But shrinkflation takes planning, supply chain. You may even have to actually change the packaging, all that type of stuff.
It's just wild that like 5 tissues in a Kleenex box can make such a big
times
difference.
Millions of Kleenex boxes is a huge cost savings.
But that's wild to think.
Well, I mean, it's just math. You know what they can't have any shrinkflation on?
Don't say it.
No, gasoline.
Oh, I thought you were going to make an inappropriate joke. Gasoline, guys.
I see where your mind's at. Gasoline, there is no shrinkflation, because ultimately what happens is they can only manipulate the price.
Why?
Yeah, because you buy it.
Wait.
You buy it based on a gallon.
Well, obviously, that's
so
a dumb
obvious.
point.
All right.
Okay. All right.
You're still right, even though you called me dumb, and I disagree, but you're right. Go ahead. IPOs.
Because he wants to be happy.
IPOs.
So the IPOs.
Yeah.
The private markets, as private companies are maturing and these valuations got out of hand, what the hell is going on now when they want to go public? Well, why don't I just tell you? Fintech companies are putting IPO plans on hold. We're seeing it across the industry, and they're cutting expenses. We know a number of companies that had, are cutting costs, laying people off, et cetera, who were going to go public, but now are not. But do you remember in 2020 when everybody thought that companies would freeze and not go public, and then they did, and it was a massive.
I would like to come back to one point real quick people are making in the chat, which is that they can add ethanol to the gasoline. Yes, I wasn't going to get into the complexity of the gasoline mix, but yes, they can increase the ethanol to 15%, which would dilute the gasoline, which means that they technically are conducting a different, or they're selling a different
People are
mix.
too smart in here.
Our audience is incredibly intelligent, but that is besides the point. You still pay by the gallon.
Beside the point, not besides.
Listen, I had somebody today tell me that it's hopium or hopium or whatever. Look, I don't speak well. Whatever.
Wait.
Y'all know I don't know how to pronounce words.
Igloo?
Igloo. I can say that shit now. Not breakfast. It's breakfast. Breakfast.
You really can't say that word.
All right. So on the IPOs, listen, the IPO market has obviously not been so hot. It was really hot. Now it's not. There's windows of time where companies go public. That's why last year, when things were all booming, you saw companies going public as fast as they possibly could, because the public market was saying, come on in. The water's warm. Let's go.
I don't like that expression.
Well, that's an expression.
I hate it.
Then, now they're like, hey, don't come on in. The water's cold now. Now it's freezing cold. And so naturally what happens is companies are just simply taking their cues from the public market. The public markets love their companies. They're assigning really high revenue multiples and EBITDA multiples. And they're saying, hey, we think you guys are really valuable right now, and we're actually going to put you in the best light. Companies are like, let me get up in on that. But if they say the exact opposite, which right now they are, if you look at a company, I don't actually say any companies. If you look at some of these companies, they're trading at 2-3 times revenue.
Yeah.
They were trading at 20 times revenue, just a couple of months ago. So if you get a 20 times multiple, it's way more attractive to go public than if you're going to get a 3 times multiple. And so when you start to look at that,
but
they
on
just
the other
simply
hand, you need the money. So it's like, do you raise more money?
Maybe you need the money.
Public?
Some companies don't need the money, and they just simply are looking for a way to get liquidity for their shareholders. Other companies, and more companies in the private market, do need the money. And so then they have to make the calculation. Do we go public, which is expensive and takes time and is a little bit unknown in terms of what the receptivity will be? Or do we simply just go to private market investors and say, hey, give me the cash. Now, part of the problem is that there's a chain reaction as well. The public market multiples collapse and it becomes a little bit colder. Then what happens is the growth investors realize, wait a minute, if I invest at 20 times revenue and then the company goes public at 3 times revenue, I'm going to get screwed. So the growth investors do, they say, hey, we're not going to invest at 20 times revenue anymore. They then get cold. Then if the growth investors are doing that, the Series B and Series C investors say, well, hold on a second. If we invest at 20 times multiple and the next round is only going to be at 3 times, then we're going to get screwed. So then they kind of close in and they stop investing. Then the Series A folks say, well, hold on a second. And it is this chain reaction. But the further you get away from the public markets, the less that they look at the public market valuations. So if you're a seed investor, you're not as price sensitive as a public market investor is, right, in terms of multiples, et cetera. But you definitely are still aware of them to some degree because it is going to have an impact on how the business ends up operating.
I think the smart entrepreneurs, what they should have done, and whether they did it, I don't know, but like you raise money when we were in a bull market, and then spent it efficiently so that when this happens, you have more of a runway than just,
There was definitely people.
We need money.
There's definitely people who didn't plan correctly, but here's the dirty secret that a lot of people don't want to talk about because it makes people uncomfortable. If you're a good company, you can still raise money right now. If you don't have such a good company, you may not be able to raise money right now, and that ends up being the difference.
Here's what I thought was interesting. At the Money 2020 conference in Amsterdam, there was an interview with the co-founder of Stripe, John Collison, and he said that he was unsure if the company could justify its $95 billion valuation given the current economic environment. He said the honest answer is, I don't know. And but they raised money last year, so they're not looking to raise now.
Well, it ends up being, of course, nobody knows. Nobody knows what the market is, right? If you look at a fintech company, what is the multiple right now? Well, if you asked me 6 months ago, I could have told you one number. Now I tell you a different number. In the future, is it going to be the first number, the second number, or a different number? Nobody knows. It's moving too quickly. So ultimately, when people go out to fundraise, the valuation is set by the market. The market determines the price. And Stripe is not going to go do that because they don't, one, need to, but also two, is it likely will be lower than what it was previously. And so a beautiful thing, as you mentioned, is if you already raised money and you have the runway, then just wait. It's not going to be a bear market forever. It's not going to be bad times forever. It's not going to be a potential recession forever. Just wait a year, wait 2 years. If you can make it through, you'll get to the other side and we'll be back to quote unquote good times and you'll be fine. It's all about time preference right now.
I don't have shoulders.
Okay.
So weird.
All right, what's next with Twitter?
I just looked at myself and I'm like, what is going on there? Okay, so Twitter, do you think I have shoulders? Okay, he's not gonna answer because he knows if he answers. All right, so Twitter, to settle their kind of feud with Elon, they're like, all right, you want the tweets, you want the numbers, you want the real and fake accounts. They're gonna give Elon unprecedented access to platform data called a fire hose.
Fire hose of all the tweets.
Yeah. But if I read correctly somewhere, it said that there's 500 million tweets per day on the platform.
That's way less than I would have thought.
Oh, that's what I read, but that's a lot. So what is Elon?
I mean, I'm responsible for at least 0.001% of them.
We know. So what is Elon going to do with all this data?
They're going to analyze it.
Really? But how are they going to know if something's fake, if something's a bot, if something's...
Well, if Elon can't figure it out, how does Twitter figure it out?
Oh, but that's a lot of work for...
I don't think it's nearly as much work as you think. I think that you could easily go and look at 1,000 accounts, just take a random guess of 1,000 accounts. Yeah, you do it a couple times. I mean, there's studies that are out there right now that say that they think over 50% of Elon's followers are bots.
What, 70%?
Over 50%.
Over 50%.
Over 50% of Elon's followers are bots. So he's got 90 million followers. So if that's true, that's 45 million followers right there that are bots.
I don't know if that's true.
Again, who knows?
But I think it's good for Twitter for being here you go. What do you think? If he wants the data, here's the raw data.
I think that there's a lot of sportsmanship going on right now in the sense of they're all trying to posture. They're all trying to do this. Elon's trying to get a cheaper story or get a cheaper price, and the Twitter folks are trying not to pay or accept a cheaper price. What I think is going to end up happening here is that it's going to be proven that there's more than 5% bots. And ultimately,
does he want out of the deal? I thought he wanted to do it.
No, I think he wants a cheaper price.
Oh.
Yeah, that's my guess. But let's see what happens. It'll be interesting. I think that Elon's got a very strong argument to prove that there is more than 5% bots.
So, wait, is Moist coming on the podcast today?
Yeah, Moist is coming on the show later today.
And I didn't get the invite?
No, you didn't.
I'm single-handedly responsible for Moist.
That's not true.
I'm taking all of Moist, credit for all of Moist's
You better
success.
be careful what you say right now.
Why?
That was a little, it's a family show. Go ahead.
What? Moist is his name.
Not that. Okay, Ikea.
Okay, speaking of names, God, I'm so good today with the transitions. Ikea wants to name your child. So, you know, Ikea, the furniture store
Yes.
where we had a very interesting argument one time. It is known, do you remember
Come on.
in Ikea?
What
we
is
don't
the
go to
Ikea story?
anymore. So Ikea is known for the distinctive names of its flat pack home products. And so now the Norway branch wants to help parents name their child because they
If
have
you
so
got
many
a furniture store
distinctive-
naming your kids, call me.
Yeah,
I'm
but-
going to set up
but-
a helpline. You need help.
No, but IKEA has a name bank with more than 800 listings because a lot of the things that they name their furniture are after, like, what is it? Like towns, lakes, geographical features, but also people.
If you got a furniture store naming your kid, we're going to set up a helpline. You can call in.
IKEA is not a bad name for a kid.
What?
IKEA.
Glad that I named our daughter, not you.
Anyway, just saying.
Can
this is
I ask you a
interesting.
question, by the way?
What?
Are you,
It's
when you write the profile, where do you get all the information?
oh wow, that's actually an intelligent. I thought it was going to be about my shoulders. Where I get my information,
Yeah, like you just
I-
did the one of the photojournalist lady. How do you find the information?
I just go down a lot of rabbit holes. I watch a lot of things. I listen to a lot of podcasts. I read a lot of profiles
yeah,
on the internet.
it's kind of crazy actually.
And I ordered her book.
I don't want to actually say this, but I'm now down this rabbit hole, so I guess I have to say it. I was reading the photojournalist one, and there was a bunch of links in there, and I was like, "This is the most obscure article I've ever like." Where? How did you find this? You were like digging for gold, and all of a sudden you found like a Roman solidus over here or something.
What does that mean?
Yeah, well, you never actually had to go.
Anyway,
you ever seen
excited
like
for
people
the
with the metal
profile.
detectors on the beach?
The profile.substack.com.
Have you ever seen the people with the
Yes.
metal detectors on
I
the
used
beach?
to think that's so cool, but it doesn't work.
No, it definitely it's a metal
Not that
detector.
I've
It
tried
detects
it.
metal.
No,
You've
no.
tried to search for metal on the beach with a metal detector?
Sometimes. I had a different life before you.
I really upgraded your cool factor. All right.
right.
Thank you, everyone. I appreciate it. Make sure that you go subscribe
Oh
to
my
the
God, are
profile.
you okay? I was like, what?
You go subscribe to the profile.
I didn't hear from you for 10 seconds. I was like,
I was just, hey, you know.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.